The 10-year yield touching its highest level since April earlier today. But our next guest says the rise in yields could be a false flag. Let's bring in FundStrat Head of Research and FundStrat Capital CIO, Tom Lee. He's also a CNBC contributor. Tom, good to see you. Okay, so let's start there with the yield impact. What might people be reading wrong, you think?
Well, I wouldn't say markets are necessarily reading it wrong, but I would say as uncomfortable as we are seeing yields at near one-year highs, I don't think that this is going to be the level we see a few months from now. And I think that's more important because ultimately, if yields begin to fall because inflation pressures are easing, or if the job market is a bit softer than expected, it really puts the Fed back in focus. So I guess what I would just say is it's not comfortable to be here at where yields are. I don't think it really breaks markets, but I don't think yields are necessarily moving higher over the next few months.
Well, it's particularly uncomfortable, arguably, for small caps. Early last year, probably around this time, you made a bold call on how much small caps could rise. You've moderated from that since. But where do you see small caps going now? Why didn't the big pop that you projected for 24 pan out?
Yeah, small caps have been disappointing. I mean, unfortunately, I think there's been a rug pull on those names a few times. So I think investors are going to be very wary. But to us, I think the roadmap for 2025 is still one where the opportunity for stocks to have much better breadth widens, because not only do we have an incoming administration that is pro-business, and I think it is going to boost CEO confidence. It's pretty evident now, even seeing it in both ISM readings recently. But that's going to be a better environment for mergers. So to me, while small caps have been big laggards, actually for the last 10 years, this 10-year underperformance to the S&P is the worst in actually almost 100 years. So second only to 1998. And then from a valuation perspective, small caps are still much more attractively valued. The median PE is around 11 times, and that's almost 7.7 turns cheaper than the S&P. So it's been tough, John, to be overweight small caps, but I think they're going to work in 2025.
Okay. I do want to get your thoughts on some of the riskier assets or the riskier parts of the market that, or I'll use the word maybe potentially more speculative. Case in point, the quantum computing stocks, they had a huge move higher. Jensen Huang from Nvidia comes out yesterday, makes comments saying that, some of the supercomputers are still, and the full, realization of supercomputers is still decades away, and you see all the stocks tumble. I know there's one that you like in your granny shots here. I believe it's IonQ. Just want to get your thoughts on what we've seen in some of these parts of the market and how to think about investing, if you should be investing in some of these more speculative or futuristic frontier tech-like companies.
I think investors do need to put a long-term lens on a lot of these important mega themes. I think quantum computing is in the earliest days. I don't think anyone can judge really whether it's 15 years away or 15 months. And I think people have made many mistakes over the past 20 years looking at things like social media and underestimating the adoption rates there, or internet, or even AI now. I mean, just think about 2 years ago, how many people were saying AI was going to actually take far longer than expected. That being said, I do think the environment for stocks hasn't been great for the last 3 weeks. I think it's really gotten people into a recency bias, thinking, look, we've neared a top, or that stocks are just awful now. I think we're getting close to the point where, you should be betting really and leaning heavily against that. I mean, even look at AI sentiment, it's almost back to negative. But Morgan, regarding quantum specifically, it is a pretty innovative technology. I think these are going to be high volatile names. And so until we get back to risk on, they are going to be tougher names to own. But I don't think that means you have to sit them out in 2025.
In a move that's set to shake the very foundations of the global semiconductor market, the Biden administration has been mulling over new embargoes on some of the world's most influential technology companies. The spotlight is on Nvidia, the trillion-dollar juggernaut, and its rivals as potential sanctions loom large, threatening to redefine the landscape for artificial intelligence technology. Welcome back, everyone, to Investocracy.
For more, let's bring in Dennis Unkovic. He is a partner at Meyer, Unkovic and Scott. Dennis, and does a lot of business in China and that part of the world. Dennis, welcome and Happy New Year. Good to see you.
Happy New Year, Tyler. Thank you.
If President Trump puts either new tariffs on Chinese goods or raises the tariffs that are already there, you say that Xi Jinping will retaliate. How will he do that? And I got to think that one of the ways he might is to put more and more restrictions on critical minerals that are very, very important to, for example, the making of batteries for U.S.-made EVs.
You're right. They're called REEs. And those REEs are they are really not unusual. You can find them in many parts of the world, Tyler. But the key thing is in Jiangxi province, which is about 500 miles north of Hong Kong, that's where they refine all these minerals. And that's where the Chinese in the last couple of days have said, we're going to put a halt on these products that have a dual use, a military and a commercial use. And the Chinese will not back down. I think Xi Jinping is getting ready for a fight with incoming President Trump.
And let's keep on this theme here. If the new president of the United States comes in and puts more tariffs on, is he likely to increase tariffs on U.S. imports into China? Or what will his first line of defense be?
I think his
How will he
first line of
prosecute the
defense,
fight?
I think he wants to limit the key elements going into the U.S. for the companies. I think if Trump comes up with a 30% tariff tomorrow, then the next day the Chinese will have their own 30%. Xi Jinping is in total control of the Chinese economy, and he will not back down to Donald Trump. So I do not foresee a very clear road going forward.
Steve?
So, Dennis, he might not want to back down to Donald Trump, but it reminds me of the Cuban Missile Crisis. You don't think that he will blink first, but there's been some analogies made to Japan and China being in a deflationary spiral where Japan lost 25 years. Do you see those similarities to China being in a deflationary spiral as well?
Yes and no. Basically, no, because Japan has about 185 million people. China has 10 times as many people. There are multiple levels in China where Xi Jinping can put pressure on, particularly on foreign companies that are doing business there. And I think that is really why Xi Jinping is much more of a challenge than it was with the Japanese. Do I see a deflationary economy in China? I think this year will be worse in growth than it was in 2024, but I don't see any significant value added because of that.
The narrative of the U.S. imposing fresh sanctions on the export of AI chips to China paints a curious picture. At the heart of this development is Nvidia, with its valuation soaring past the $3 trillion mark in 2024 due to its indispensable GPUs that underpin AI innovations. The decision to potentially restrict chip exports aims to align allied nations under Washington's strategic terms, potentially a modern twist on a tech-driven arms race. AI chips have become central to not only tech progress, but to economic strategies as nations keenly guard their tech sovereignty. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Dennis, it's Karen. Thanks for being on. When you see this sort of tit-for-tat ratchet up, where does the U.S. threaten to withhold grain sales to China? How do you think this escalates?
I don't know what President Trump's going to do. My guess is that on a broad spectrum, he will immediately raise tariffs as soon as he gets in. That will essentially target those industries that have technologies that the U.S. considers to be of a national security thing. As a result, that's why China yesterday took Boeing, Lockheed, and Raytheon and said, we're not going to sell any parts coming out of China on a dual-use basis. And so I don't see a reason for either side to back off immediately. A lot of it depends on President Trump.
Before we get on to trading this, I don't want to leave this topic without talking Taiwan very briefly. What do you expect to happen there? And is it a 2025 issue? Is it a 2027 issue, which I increasingly am hearing, that is where the real confrontation may come?
If Taiwan was invaded by China, Tyler, I believe that would set off a global catastrophe. I don't think that Xi Jinping is strong enough now with an economy that's growing between 4 and 5% to essentially shut down the economy to take Taiwan. I do think that he is determined that China will eventually take Taiwan. Now, whether it's 27 or 28, I don't know, but it's not 2046, which is the 100th anniversary of the CCP. So I see it probably in the next several years.
According to markets, semiconductor stocks rode high on the AI boom, buoying indices like the S&P 500 and NASDAQ by impressive margins. The chips, once mere building blocks of computing, have ascended to form the core of geopolitical strategies. On the flip side, even as Nvidia and its peers publicly downplay the embargo's potential impacts, many are quietly advocating for leniency, as evidenced by closed-door government lobbying efforts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The Biden administration reportedly set to announce a new set of last-minute expansive chip export restrictions today. It's a three-tiered system that would put new caps on AI chip curbs depending on the country and the company. Deirdre Bosa has more in today's Tech Check. Deirdre, explain this for us, please.
I will, and in doing so, I'm also going to ask how successful have the current restrictions been? The export ban did prevent China from getting the highest-end American chips, but it did not stop China from catching up in the AI race, proving that necessity is the mother of invention. Now, despite not having access to Nvidia's best-performing GPUs, a Chinese research lab called DeepSeek was able to build an AI model using dumbed-down GPUs that beat OpenAI's GPT-4 on certain benchmarks. That just shocked the AI community. Here's what Perplexity CEO Arvind Srinivas told me.
But the reality is some of the details in DeepSeek V3 are so good that I wouldn't be surprised if Meta took a look at it and incorporated some of that in Llama 4, right?
So advanced that our best American companies could use it as a blueprint. That is a shocking statement. In other words, the existing chip restrictions, they did nothing to slow down China's pace. It only made them more creative and more efficient. They backfired. Other Chinese labs are also making major strides in efficiency with limited resources. There's Kai-Fu Lee's 01.ai and Alibaba's Q1. There's others. The export ban on China has also led to smuggling and loopholes. A report from The Information said that TikTok owner ByteDance and other Chinese companies rented high-end GPUs through American cloud companies to get around restrictions. Another report from Reuters a few months ago said that TSMC chips were found on a Huawei product. So creativity here in a different sense, forced again by those restrictions. So begs the question, by expanding them, what are you really achieving? And this is a point that Nvidia took up in its response to those expected expanded restrictions. It calls them a last-minute policy that would play into the hands of U.S. adversaries. And this is pretty uncharacteristic language from Nvidia against the current Biden administration. It also echoes an Oracle blog post from just a few days ago that said that the export control framework will go down as one of the most destructive to ever hit the U.S. technology industry, and, quote, says we don't need a ride. We need government to get out of the way, which will be very interesting with the incoming Trump administration and how they're going to deal with this.
With geopolitical tensions serving as both a challenge and a catalyst, Nvidia's current market position solidifies its standing as a formidable investment. The forecasts predicting continued growth in the sector add an optimistic sheen to the palette, portraying Nvidia as not just a tech company but a linchpin in the global economic machinery. How would you, as an observer of this unfolding drama, navigate through these developments? Share your thoughts. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.